You want more than just the headlines? Find out what's going on and what it means with me, Dennis Prager, this morning at 11, right here on AM 560, The Answer.
Dan and Amy, and we'll get back to the schadenfreude that we're feeling over Matt Lauer and El Gaito going away. But we got to talk taxes here with the Senate GOP tax plan still hanging in the balance, although progress seeming to be made. Here's what President Trump had to say with respect to his optimism that the Senate will move something out so that it can be reconciled and gotten to his desk before the Christmas holiday.
We had a unanimous vote on the tax bill, and it goes now the next step, and I think we're going to get it passed. I think it's going to pass, and it's going to be very popular. It's going to have lots of adjustments before it ends, but the end result would be a very, very massive, the largest in the history of our country, tax cut, and lots of good things are going to happen, including the bringing back to our country of, it probably will end up being over $4 trillion money offshore that's stagnant, that companies and they're just not able to bring it back. So I think it's going to be a number over $4 trillion.
And among other benefits that the president suggests. For more on this topic, we're pleased to be joined by Steve Moore, chief economist for the Heritage Foundation, CNN senior economist, Wall Street Journal columnist. Steve, thanks for joining us.
Hey, Dan. I'm sorry this morning I'm a little filled with grief over the Matt Lauer story.
Are you still processing it?
sure.
Because there's a lot of processing going over on
you got to process
NBC.
that.
Well, the great thing about that story, by the way, I know we're going to talk about the tax cut, is, Matt Lauer was just browbeating Bill O'Reilly.
That's right.
About his sexual misconduct. We got to dig up the audio of that one.
Yes.
Actually, we played some of that here.
That's good stuff. All right, Steve Moore.
We're going to get this tax cut done. We made a big gain yesterday, getting it through the Senate Finance Committee. I've been meeting pretty regularly the last couple of days with the senators on the fence, people like Jeff Flake and Ron Johnson of Wisconsin and Corker of Tennessee. I think they're all very gettable. I think they are going to get to 50, 51, 52 in the Senate, and I think we're, look, it isn't a done deal, but I think they're well on their way to getting this passed, and I'm feeling probably more confident today than I have any time in the last 3 or 4 months that we get this historic tax cut done. And I got to tell you, if you do this tax cut with the 20% corporate tax rate and you do the immediate expensing, allow businesses to write off their capital purchases, for buildings and machinery and things like that, you're going to see the biggest boom in the first half of 2018. It's going to be a gigantic. I think you could see 4.5% growth rate, something we haven't seen in this country in 20 years.
Well, it's strange. The two lame duck senators, Corker and Flake, are now concerned about increasing the deficit.
Yeah.
I mean, is there anything to that, or are they just trying to be, agitators to President Trump?
Oh, look, I mean, first of all, the deficit, the spending side of the equation, which as soon as we get done with this tax cut, we can talk about that, but it's a disaster. I mean, the Republicans on fiscal restraint are a complete disaster. It's indefensible. They're increasing the caps this year by more than $100 billion. These are Republicans. So, the problem, Amy, is not the tax side. It's the spending, which is completely out of control. And then these same people want to blow the lid off the caps, say, we got to do something about the deficit. But look, you got to get the economy growing if you want to get more tax revenues in. You got to get the growth rate up. You got to get more people working. You got to get companies more profitable. You got to get less people off welfare, more people working and paying taxes. If you do that, you go a long way to at least stabilizing this enormous national debt. But there will probably be, there's this new talk about a trigger, Amy, where if they don't reach the growth rates that they expect, they would increase the corporate tax rate a little bit. I'm fine with that, but I told Corker, I met with him yesterday, I said, look, if you're going to have that, the trigger for a higher tax rate, if we don't get the growth rates we expect, then if we go above the growth rates we expect, can we then reduce the corporate tax rate by another percentage point? So I don't know. What do you think about that idea, Dan?
Well, I don't like the automatic tax increase. If you're going to do it one way, then do it the other. So at least you're still incentivized to cut spending so that you're not crowding out private sector investment. So I guess if that's what's required to get this to get the 50 votes that are necessary, then these are the difficult compromises that you have to make, I suppose.
Yeah, look, I mean, is this the bill that I would want exactly? No, I give this grade a B. A B as in boy. So it's a good bill. It's not a great bill. I do think Ron Johnson from Wisconsin has a good point, Dan and Amy, about the small businesses. His complaint is, we do a lot for the corporations, like Apple and Google and Boeing and companies like that. But the small businesses get some benefit, but not nearly the benefit that the big ones do. So, I'm working with them to try to, let's get that rate down lower for the small businesses, because 60% of jobs are created by employers, with less than 250 employees. And a lot of them are, employees that have employers that have maybe 10 or 15 workers. So I think there's going to be some fixes and tweaks to the bill, but we're well on our way.
Can we fix to make sure that we can still write off our mortgage interest deductions and property taxes from my federal income taxes, or does it depend on where you live and how much your home is worth?
Yeah, so I think what they're going to end up with, by the way, I hate the state and local tax deduction. I think it's the worst feature of the tax code. I think if people in Illinois want big government, you're welcome to it, but the people in other states shouldn't have to pay for that. Now, I think where this is going to end up, Amy, is they're probably going to have a $10,000 cap on your property taxes. So you get to write off property taxes up to $10,000, and if they're above that, you pay, you lose your federal deduction on the amount above that. By the way, $10,000 for property tax, that's a lot of money. So you have to live in a really, really high tax state like Illinois to exceed that $10,000 level. But your state income taxes are no longer going to be deductible, and that's a good thing. We shouldn't, if you look, folks, if you want to pay lower income taxes, move to Texas, Florida, or Tennessee, and get the hell out of Illinois.
And the mortgage interest deduction?
I hate the mortgage interest deduction too. I just don't think, if Bill Gates built a massive mansion, or LeBron James, that they need to have a tax write-off for that. But, look, this is pure politics, guys. I mean, K Street is still alive and well. The swamp is still filled with swamp creatures. And I think the realtors and the mortgage, brokers and so on will probably get their way, and they probably won't touch the mortgage deduction. I like the idea of just capping at $500,000. Which is, I think, what the House does, but I don't think that because look, the most powerful union, interest group in Washington is probably the housing lobby, and they always get their way. So I don't think we're going to probably put a cap on the mortgage deduction.
Oh, so you don't no cap, no $500,000, no $1 million cap?
Probably not. I mean, that's not decided yet. But if I were betting man, I'd put my money with the home builders and the realtors.
Yeah, it's funny because that's as the left is arguing that this doesn't benefit the middle income family in America. Really, you've got all of those deductions, even under what Republicans have proposed at present for middle income families. I don't know a lot of middle income families that are living in $1 million homes or paying $10,000 property tax bills. I mean, except in Illinois.
Well, yeah. Now, the other big deal in this bill, Dan and Amy, is getting rid of the individual mandate penalty under Obamacare. Now, I'm here to tell you, if you get rid of the individual mandate, which, by the way, is a tax on low-income people and young people, you're going to put Obamacare into a even faster motion death spiral. Because what's going to happen is people, more and more Americans are just going to decide they don't want anything to do with Obamacare. They will opt out, and they'll buy, health savings accounts or other insurance plans that make more sense for them. So this idea of just giving people the option of opting out is a great idea. It is going to lead to the eventual repeal of Obamacare because the plan isn't going to work anymore. And, the average person who pays that tax penalty earns $35,000 a year. So Democrats are having a hard time explaining why they have to force people to buy. I mean, isn't this amazing? Think about this, guys. We subsidize people through the roof to buy Obamacare. We penalize them if they don't buy Obamacare, and people still don't want it.
I want to switch gears because I know this is a particular bet noir of yours, the Consumer Financial Protection Bureau, and this coup attempt by bureaucrats, Cordry's out, and now this Leandra English playing the role of George Costanza. They got their head handed to them yesterday by in court, suggesting that Mulvaney is actually the acting head, and the Consumer Financial Protection Bureau doesn't exist outside of the federal government without any accountability to the executive. What if now that Mulvaney's in charge, and now that we see just the disposition of those in the agency, in addition to the negative impact the agency has more generally, Wouldn't we like to see the Trump administration just get about repealing Dodd-Frank and getting rid of this agency?
Yeah, on this issue of the Consumer Finance Protection Board, I mean, this is so typical of Washington, Dan and Amy. There are already 6 or 7 consumer financial protection boards in Washington. I mean, there's one at HUD, there's one at the Federal Reserve, there's one at the Treasury Department. I mean, we've already got this covered, guys. I mean, it's so typical that we duplicate. We have agencies that in one branch of government, the agency of government that do exactly what another one does. And so, if we get rid of the Consumer Financial Protection Board, it's not as if all of a sudden there's not going to be any consumer financial protection. And by the way, the left is going crazy because Mulvaney made this point that this is a stupid agency that I forget the quote, but he said something like, it doesn't accomplish anything. We should get rid of it.
Yeah.
Those are the kind of people I do want Trump putting in charge of these agencies. We want to downsize government. We want to get rid of the wasteful agencies. And, I think that was something that made him absolutely fit for this. And one of the problems Ronald Reagan made is, he said he wanted to get rid of all these agencies, and then he put people in charge of the agencies who lobbied to keep them. So I applaud Trump for doing this. And, in terms of Dodd-Frank, this is a really tough one because, the House has actually passed a bill that largely, guts Dodd-Frank, which has had a negative impact on our community banks, but it's stalled in the Senate. It's just not moving there. So are we going to get Dodd-Frank repealed? I'd like to say yes, but probably not.
He is Steve Moore, Wall Street Journal columnist, senior economist for CNN and Heritage Foundation economist. Steve, thanks for joining us. Appreciate it.
So, Dan and Amy, what are you guys going to do with all the money you're going to save?
Amy is a very high-income earner, so she's not going to save money under this plan.
I think I might save, but I don't know. I'll buy you a nice Christmas gift.
We're gonna buy the
big present if we get this thing done.
I'll get you a Bitcoin because it's now at $10,000.
There you go.
Does that sound?
Yeah.
And by the way, if we get this thing passed, I'm getting on my white horse. I'm riding out of town. I'm coming back to Chicago.
All right, finally,
nice.
the cavalry. Finally. All right, Steve. Thanks.
Have a great day, guys. Bye.
You too. And he joined us on our turnkey.pro answer line.